Hello, everybody, and welcome to the Speaking of Insurance podcast. My name is Aaron Bollinger.
I'm Brian Bollinger.
Today, we're going to be talking about why my professional father doesn't have a LinkedIn account. Just joking. Why don't you, Dad?
What's LinkedIn? I've heard of it.
Okay, my dad is not a fossil. He obviously knows what LinkedIn is, but the thing is that he's not really been a big social media guy. And so this whole podcast has kind of been his coming out party.
Wow. Now you're making me feel quite like a debutante or something here. The deal is that, I became complacent. Honestly, my clients knew me. They liked me, do a lot of business. We're doing fine. The idea of actually going out there and doing more, work with social media and stuff for whatever reason, never really got me interested. But then you got in the business and you're pushing me. And I'm trying to run as fast as you are, son.
Yeah, and obviously I've been historically heavily addicted to social media, and so being actually productive and doing stuff like that is a very good change of, nature for me. So thank you for that, courtesy of you and your ability to, join me on this podcast and share some of your expertise, and hopefully a little bit of my youthful experience and lack of due diligence can, give other people some other different type of...
Lack of due diligence scares me.
Errors in emissions insurance, topic for another podcast. Anyways, okay, let's start with personal auto insurance. Okay, so one of the biggest things that we've seen recently with a lot of people is that these companies like State Farm, these companies like Farmers, they're not liking some of the type of cars that a lot of people are driving, right? I mean, we've seen Tesla insurance actually beat everybody else in terms of insurance pricing for Teslas. Why do you think that is?
Well, Tesla came on the scene. It was a problem. Electric vehicles in general, people were afraid of them catching fire. There were a number of fires that happened. It seems like that's a little less prevalent now. I've heard anecdotally that maybe the Tesla program for insurance, maybe they've taken some rate recently. So I don't know if that's still the case or not. But there are certain types of cars, certain models of vehicles, certain high performance features that your car might have, think of like a Lamborghini, that, make it difficult to insure, and if not difficult, expensive to insure. And so I think what happens is, we all think, hey, what's the cheapest car to insure? Well, liability only, get an old clunker, something that you feel comfortable in and just drive it and have liability only. The problem is, like in California especially, we recommend people have umbrella policies or excess liability policies because auto claims are one of the leading causes of liability claims and bankruptcies, if you do get sued, of people. And so the goal here is to try to avoid that, try to minimize that potential, especially if you're a higher net worth individual. That's just kind of one of the things that we worry about.
Yeah, I mean, there's a lot to unpack there. Obviously, the electric vehicle side, the Tesla, right? I mean, I personally would say that the biggest reason that Tesla's charging more or charging less than everybody else in terms of insurance pricing is, how much does it cost for them to pay, right? They've got all the equipment. They've got all the stuff to repair the vehicle, right? In the event of a loss, who do you think that they're going to have to go to, the insurance company, to go get the stuff for the Tesla to repair the Tesla? Tesla, right?
They'll get the parts from Tesla, but the people doing the repairs will be a repair facility, and just the cost of labor, though, on these auto repairs, ever since, honestly, COVID, they've been complaining about it. But in general, inflation is real. And, what used to be a $300, actually, I use the bumper analogy. I used to have a 65 Ford Mustang, and, that metal bumper was chrome. It was beautiful. It broke or whatever. You dinged it. You really wanted a new one. It was 3 bolts and $100, right? I mean, you look at then it became more of like the molded kind of plastic kind of bumpers, and those are maybe $500 to $1,000, right? Yeah. Now the problem is you got all those darn electronics in them, sensors, airbags, this, airbags, that, and it's like you got to take apart half the car to
for a ding on the door. A ding on the door that would ordinarily, like with your Mustang, cost a couple $100. Buff it out, do whatever. I mean, if you touch one of those electrical things,
yeah, when you did that illegal U-turn, it cost us what? Was it like $8,000 for a door ding? I mean,
let me preface this before he goes down this rabbit hole. I was once a youthful driver. As you can tell now, I'm very old and mature. No, I'm just joking. It was to high school, and I have a daily U-turn that I would do to park on the opposite side of the corner of it, so I could walk into school. And obviously, there are cars that would also park there, a bunch of other students. And so, left turn arrow was green for a little bit, and then it turned red, and then at which point nobody was coming. Obviously, it was literally half a second after it turned red, so I would consider it yellow. I did a U-turn.
How come you didn't tell me about this when you were 16, son? It's like a truthful thing.
I had sworn on everything that I wasn't at fault. I think I might have just had a realization right now that actually I might have been the one who was at fault. My car did not stall out. It was me behind the wheel who stalled out. And so
Oh,
I
there's
did the
text limitations
U-turn.
on this. I'm a little worried now. Yeah, but that other party, if I recall correctly, without naming any names, I think there was some other damage to their side of the car, and I personally felt like we were getting shaken down. But
Well,
that's
let
how
me
we.
explain it. So I did the U-turn, right? I scratched a little bit of the door, right? It was a red Volt, Chevy Volt. It was a lower, Chevy Volt. But
We
it
don't
doesn't
have
matter.
to give the.
I went over. I looked
license
at it.
plate or
Didn't seem
driver
that
information.
bad. Seemed like something that would be able to buff out, and I'd be able to help them repair in the worst case scenario. And I go to the other side of the car, and it looks like there's a bunch of scratches there as well. And so obviously that wasn't my fault, but it seemed like there was some pre-existing damage to the vehicle. And when we go to ask them if they want any help, seems like they want to go through insurance, which is completely understandable. Obviously, we prefer to pay our claims cash and just do it so we don't have to file a claim. So then, not.
If we get a release, if there's a bunch of ifs and buts here, we don't recommend that for everybody. But again, a non-injury accident where somebody scratches a bumper, I mean, is it really worth dealing with the insurance company, having them have to manage
They
it and
thought
deal
it
with all
was
that
so,
nonsense?
and they were the damaged party. So then they thought it would be best to go through the insurance
Well,
company.
no, I called them. I actually talked to the parents, and they gave me an estimate, and they wanted, I think it was $6,000 for the two scratches or something like that. So yeah, I definitely felt like we had no other recourse but to go ahead and file the claim, and that's the other challenge. Like if you do decide to try to manage a claim on your own, it's not advisable, right? I mean, seek competent legal counsel. But this thing for us could have gone sideways. I could have paid out the $2,500 I thought it should have been, and then they could have come back for another $5,000, and then come back to me again for another $3,000. I mean, we've had clients that had the same problem. I mean, two cars, going on a narrow road, one on the left, one on the right, and somehow they clip each other at the end of it somehow, and nobody really knows who's at fault. But again, one party wants to sue the other one, and at some point you do have to turn into insurance, because if not, it's just not worth the headache. You got a business to run, you got a life to live. You got to sleep well at night, and so that's why you have insurance.
Yeah, that's the definition of insurance, right? The reason why you pay so much is a lot of people in California and across the country do. But I'd like to touch on what you mentioned before. The liability only on the vehicle, the older vehicle that is, right? Obviously that's an option, right? I mean, you'd think that some newer cars that have less likelihood of loss are, would be cheaper, but they aren't, right? Because it does cost, a lot to repair some of these newer vehicles with the newer equipment and gear that they have, right? So would you touch a little bit more on that old, the older vehicle? Let's say somebody already has like a, '04 Tacoma we've seen, right? And you might want it on a liability only.
Yeah, we've got a number of clients, honestly, and it's something that a lot of our more cost-conscious people understand. Sometimes even like people are like, hey, my car's old, I kind of want to just get rid of it or donate it or whatever, but they still want to have it as like their third or fourth or fifth vehicle. And so a way to kind of contain the cost of it. Again, they're self-insuring. This is that idea of you insure for the stuff that you can, absorb and not lose sleep over. If it's just, the liability side, we never recommend self-insuring for liability insurance, especially on the excess side.
Yeah.
The insurance is just too cheap, and the millions of dollars of coverage you can get is just too beneficial for you. So we can't recommend that. But again, if you've got an '04 Tacoma worth $5,000, whatever, $3,000, worst case it gets totaled. You know what I mean? It's worth zero. Maybe it's $500 scrap. I don't know what they get for that anymore. But here's the thing: you save a few $100s a year. It kind of allows you to kind of justify keeping that vehicle around. And again, you might use that for doing some stuff that you don't want to use your better vehicles for. Maybe you're going and hauling stuff from Home Depot home or something like that, or you have some plants or grass or seed or whatever it is, fertilizer. You just have something as like an extra vehicle. We do have some clients though that do that liability only, and it's still quite a bit of money. $1,200, $1,500, $800 a year, maybe depending on the vehicle and your driving situation. And in that case, it is harder to justify even having coverage on a vehicle that's sitting. Now, there are classic cars that we can get classic auto policies for, but there are some later model stuff that you don't really want property only, or you don't need property, so you liability only, but you really don't even want to have to pay for full use of it because you do 200 miles a year or 40 miles a year. There are some policies we can sometimes get, depending on the specific to your vehicle and your usage situation, that can be beneficial and save you a ton of money.
And obviously, weighing that money that you save also and the cost of that vehicle, right? I mean, if you're only saving, a couple $100s by going with the liability only side, it might be worth it to just, add that couple $100s to your cost and get that that vehicle covered in the event that it were to get, like you say, totaled, right? And so just understanding that risk, that when you do decline those coverages and you do elect to go liability only, you are practically saying bye-bye to the vehicle in the event of a total loss, and you're just covering that other party, hopefully enough. But again, that's something
For
else.
liability only. Yeah, exactly. The insurance company is on the hook for the liability. Whoa, sorry about that. And you're on the hook. That's an earthquake. No, just kidding. Bad jokes. That's a whole nother type of insurance in California. Most people don't have properly insured. We can talk about that in their podcast.
Digressing. Goodness gracious. Yes. So we're not talking about earthquake insurance. Let's touch on those limits though, right? I mean, the liability limits. Right now, I mean, we've seen recently an increase in the California minimum liability to go from 15/30/15 to 30/16/30 or 30/60/15, and so these are really low numbers. And obviously, like in the event that you were to get into an accident, there's like I'd almost say like a 90% chance, 99% chance that you're not going to be covered enough, and that there's going to be some additional recourse and things like that.
Which is one reason why we think it's incredibly important for the average car owner in California to have uninsured, underinsured motorist coverage. It allows you to basically insure every other crazy on the road if they hit you and it's their fault. Now, if it's your fault, it's your fault. You don't have coverage for it, right? We can't insure you for your own bad choices. But if they hit you and harm you, it basically gives them insurance for $1 million or more. And to us, that is really necessary and an appropriate use of money. Unfortunately, we have had that payout over $1 million in our office. It was in a very tragic situation that happened, so I won't go into details here. But nonetheless, even on the smaller stuff, being able to have your medical payments taken care of if you do miss time from work and things like that, being able to recoup some of that money is really critical for people. And again, it's fairly inexpensive. And again, if we're talking about, would you rather go with liability only versus having your full comp and collision on the older vehicle? Probably give up the comp and collision, but if you can afford it, I'd highly recommend taking that savings and applying that to uninsured, underinsured motorist coverage, because that's, to us, the thing that you really want to protect against. That's your family's livelihood. That's real important.
Yeah, because I mean, we know there are a lot of people who are driving around either with the minimum limits or no insurance limits, right? And so, God forbid something happens to you if you get into an accident with one of those people. I mean, obviously, it'd suck to be one of those people, but I mean, it would suck even more to get into an accident with them and not have any coverage or any way to help repair your car, help regain some of that loss that you'd experienced. And so for those of you who can and want to and are able to control the controllables, please do elect to add that coverage for the extra couple $100, or for those of you who do have more vehicles on your policy, whatever it costs. I think it is a very important thing to have on your policy is underinsured and uninsured motorists, because I mean obviously you can't estimate, but could you estimate how many people are driving around with not enough limit or not high enough limits or no limits on?
I think I've heard numbers in like 60+%, and I don't know if that's true or not. But I mean, again, and every situation is unique, right? I mean, it even goes over people that if they have the umbrella, it gives them an extra umbrella, right? I mean, it's just relative here. But again, it goes back to that adage that they said, may insurance be your best waste of money.
Yeah. I don't know, maybe your mic's coming on a little bit, maybe you want to move it just a touch. That seems to happen for some reason, either with the recording software.
Oh, was that earthquake that happened earlier?
Oh, yes, the earthquake of passion, where you pounded your desk out of anger for the...
I guess I shouldn't do that, huh? Is that one of those things?
No, it isn't. Yeah, but we digress. Anyways, let's also talk about commercial auto insurance. I mean, we've touched on the uninsured motorist side of personal auto insurance. The recommending for higher limits. First off, we recommend whatever the maximum limit is for your, California personal auto insurance. If you can't afford that, talk to your broker, see what you can optimize. But for those of you who do, are medium to higher net worth individuals, and you might be eligible or wanting a personal umbrella, which would even add even more stability and assurances to that foundation of your insurances and add additional $1 million to $5 million to $10 million some of the time in coverage for the liability side, it does have a minimum requirement for the coverage. So some companies might require $250,000 in the first coverage, $500,000 in the second, and so that's the lowest.
Talk to your agent or broker.
Yeah.
Everybody's unique situation. Obviously, if
But
you've had like a
it's very
DUI
important
in the past, we can't get it, or it's super expensive. So yeah, keeping that clean driving record. To me, one of the things we also want to touch on is how do you pay less for insurance, right? And there's really, besides driving a clunker, not everybody wants to drive a clunker, but having your motor vehicle report show no accidents and no tickets. That means if you're available or able to go to traffic school, do traffic school. Make sure you get that done way before the deadline. Make sure that gets processed correctly so your driving record has no points on it. That's one of the things. The second thing is think about how many miles you drive your car in a year. Now, insurance companies have gotten wise. They're now at a point where they're pulling service records from where you get your oil change and stuff like that, or your smog certificates and things, and they're getting actual usage estimated data from these third parties, and they're pretty darn accurate with what they think you're actually driving. So just be aware that, like, you can't really do what you used to do, which is say, oh, I go 300 miles a year. We don't recommend that because very few people actually do that. But 5,000, 7,000, 10,000 miles. Obviously, give it your best guess. They'll do it based on where your work is, where your home is, how often you go to the office. These kinds of things. They're pretty good about coming up with an estimate. But again, they are double and triple checking that data now. And you need to be very aware that, that will change. A lot of people get a renewal. They get first year, they put 5,000 miles down or something like that, actually do 10 or 12. The next year, the insurance company figures that out at renewal, and they bump that up. And that adds to the 10 or 20% typical rate increases we're seeing right now. It adds another 10, 20% on top of it. And all of a sudden, you get people with a 40+% rate increase, and they're very irritated. They're very upset. And these are things to, talk to your agent or broker about. But also be aware that, that is one of the rating factors, because obviously the more you drive, the more potential there is for you to have an accident.
Yep, everything goes in the insurance company's calculation, right? I mean, they're like, there's like a movie where there's a bunch of cameras everywhere and they're just watching you, and they've got knowledge of everything that you're doing. I mean, obviously it's not that bad, but I mean, in terms of your vehicle and the odometer readings and things like that they require, they're pretty meticulous in terms of their detail, oriented approach to it, and making sure that they're getting the proper numbers and that they're charging you the right amount of money. And you might see at the end of the year, if you've been driving, said you've been driving at the beginning 3,000 miles, you go 6, 7, 8,000 miles, they got to rewrite your policy. And then that's another thing. A podcast ago we talked about the relationship with the insurance company. We're not trying to lie to them, but also we want to optimize as much as we can. And so I'd like to talk about some of the discounts that companies do offer. If you have a student driver and they're a good student, please, I think it's a free
share the grades, show them, and also encourage your kid to get good grades in general. I think it's worthwhile to give them $50, $100 here and there, but I think that's something that you might want to talk about.
I had never received any benefits. No, I'm just joking. No, my parents were very, I would say.
We bribed him. Let's be clear. We bribed you to get good grades occasionally.
The only reason that I got good grades was so I could afford my Lego games.
Oh, your Lego games. Okay, see? This is how he financed his gaming addiction, huh? So I feel bad about that now, but I guess it is what it is.
But anyways, that additional money that can go into your wallet could also come from maybe having a AAA membership. And so, just telling your insurance broker that you do have these things, or asking questions. Hey,
even here's the thing about AAA. We do recommend it for that towing protection. They got a pretty good product out there. Our family uses it. It's nice to have, especially if you have an RV or something like that. Having that extra protection of towing, and it's super easy to use. So I think of all the services out there that we think are pretty good, I think AAA is one of them. Their auto insurance rates, they work out for some people they don't. Again, we're not here to tell you if that's a good or bad thing for your particular situation. But the home policies in the past used to offer guaranteed replacement cost, and that was something we couldn't do. We actually gave a client away to them that was in the Pacific Palisades, and their house actually got hit with that some damage. Thank God didn't get completely destroyed. But here's what I'm saying, you got to kind of do what's good for you. You got to look at these discounts. I know some companies even think they have Costco discounts. Is that Mercury, Aaron? Is that one of the ones too?
Mercury does offer a Costco discount. That's one of our go-to companies for the personal auto side. So, I mean, if you have a broker or agent and, if they're an independent broker and you have the ability to get quoted with Mercury and you've been seeing that your personal auto premiums have been climbing a little bit, they do offer a very good offering in terms of, potential discounts and odometer readings, but we also do offer that as well. And again, particular
bundling. struggling. That's
Yeah.
the other big thing, right? If you can put more of your coverages with a company, your home and your auto, they tend to give you some discounts on both of those. The challenge we're seeing now in California is, a lot of the insurance companies aren't wanting to write or insure as many homes as they used to. So it is more difficult to do, and the rates and discounts don't always apply as much easily as they used to. But it is something to look into.
Yeah, it is definitely something to look into. So I'd like to summarize the things that you could do right now. So firstly, talk to your insurance broker. Maybe take a look at your declarations page. Make sure that your commercial or personal auto insurance policy is higher than the minimum limits. We obviously recommend the highest that it can possibly go, but for people's particular circumstances, we understand that they might not be able to afford the maximum. But I digress. Again, highest possible insurance coverage. Making sure that you do have underinsured and uninsured motorist coverage, especially in California, where studies have shown that 60% of people are around that have not enough insurance that they're driving around with, and so in the event of a loss, obviously there would be nobody to pay your claim, right, or to pay you for the loss of your vehicle, or God forbid something happens to you personally and your physical health, right? So that would help supplement that lack of the other person's coverage. And making sure also that you're adding these discounts. And so, good student discounts, sending over report cards, obviously incentivizing good grades. I mean, if you give your kid 25 to 50 bucks at the end of a semester for good grades, that could end up saving you that exact same amount of money on your insurance policy, right? And so,
more. But I'm not certain 25 bucks anymore. Does that even buy a soda? I mean, what does a soda cost at even Chipotle now? Isn't that like $6 or something? I mean, it's crazy.
Okay, yeah, prices and everything are going up, but obviously in your insurance, they don't have to if you get properly covered and apply all the maximum discounts that you can. Again, AAA memberships as well, Costco memberships some companies do offer. So talking to your insurance broker
occupational things, if you're an architect, engineer, a doctor, these kinds of things.
Police officer, things like that.
Police officers, yeah, you name it. I mean, again, the goal here is to really communicate with your agent or broker and your insurance company and just ask the question, hey, is there anything you can give me in terms of a discount that we haven't already explored?
Or are there any gaps in our coverage that we have not thought about? And so, when a kid becomes 19 years old, 20 years old, 18 years old, whatever it may be, when they graduate from high school, are they away at school? If they're away at school and one of the vehicles in the policy is garaged at a different address, that needs to be reported to your insurance company. Otherwise, you're probably paying for that person to be covered and that car to be covered, and it isn't covered, right? We've seen events where...
And the flip side is we had people say, hey, he's not going to drive, he comes back home, he drives, and it gets this gray area too. So it's really important to have clear communication and really talk through what the pros and the cons are of various approaches, because again, you take somebody off your policy, forget to add them back on, they get in an accident, there may be no coverage. So this is really important stuff. I mean, we really have to understand what exactly is going on with your... And every insurance company is different. Some companies say, yeah, no problem, we'll cover you. Always get emails, get something in writing from your agent or broker too about what their recommendations are. And, if you're going to be doing it, make sure you have that well documented. God forbid something goes wrong. We just don't want there to be any problems or hassles for you. That's their intention.
And the first step is honestly, just taking a look at your policy and talking to your broker. If you look at your declarations page, it seems like, after you listen to this podcast or something, that the limits are a little bit too low, then, obviously you might want to talk to your broker about increasing them, right? If you've heard about the prospect or the idea of a personal umbrella policy and it seems like something that could be helpful to your situation and you'd want that extra stability for your family, then obviously that's something to also talk to your broker about, right? If there are any gaps in your coverage, right? If it seems like, you've got, two kids that are twins at completely different locations, but both of them are, set away at school at a particular school and one's at the other, let's make sure that those things are up to date and accurate. Also, there's also a discounts page on that declarations policy or the part of the policy. It should be the second page on most of them, right? Making sure that you add the possible discounts that you could be and asking your insurance broker if there are any that you're not thinking of. But again, all these things are things that are doable if you just take a second out of your day. It could save you a bunch of money. It could make sure that you're covered in the event of a loss. It could definitely help your family. And so let's go from talking about family and benefiting families to commercial, right? How can we help companies, right?
Well, commercial insurance is kind of a different beast, right? Because the issue right now is that we're seeing in the commercial space, especially in California, but across the western states in the U.S., all these darn attorney billboards are up, right? And you see them, it's, I don't know if I blame Breaking Bad or Better Call Saul or something like that. But
Better Call Saul, that's one. It is.
The point is that, these billboards have led to an increase in the number of claims and to the increase in the amount that people are seeking for damages. And, on one hand, you can understand it, but everything has a cost, right? Nothing is a free lunch, right? Insurance companies don't pay claims. Our clients do, right? I've told you that in the past, I think, and it's really true. It's important to realize that insurance companies, at the end of the day, they have to charge more in premiums than they pay out in claims. Plus, they have to cover their overhead and anybody's commission or whatever. So it's like that's how they do it. That's just the business model. So as the claim frequency and severity goes up, or if there's the severity goes up, the overall rates have to go up with that to compensate for it. And so what we're seeing right now on the industry is commercial auto insurance people are getting hit really hard. I mean, rates have been up double, triple. I remember I've been in this a few years, unfortunately, 20-something years. And, there was a time,
Fortunately,
unfortunately. Well, I'm just saying I like to be younger, you know what I mean? To be 25 again. Anyway, I digress. But my point is that there was a time when companies like Hartford would do commercial insurance, and they were like $600 to $800 for liability and property insurance on fairly new work trucks for contractors. And State Farm, similar thing. They used to be super, super cheap like that. What we've seen is that go up every year for the last decade and a half, give or take. And now we're at a point where maybe it's a couple grand per vehicle. And, it is getting harder and harder to justify. But then the issue, I think you've heard about this with our clients. I mean, there's a bread truck has a blowout and takes out the side of our truck, right? Well, that bread truck's auto liability policy has to pay for the bread truck that it took, that rolled over, has to take care of our client's, vehicle that was 50 grand or 40 grand, right? So now all of a sudden you got this 6-figure claim from a tire blowout on a bread truck. And so, you're paying $3 grand a year, and you pay out 100 grand in claims. That's 33 years just to cover that one portion. This is the problem, the law of big numbers. It's averages, it's math, right? People kind of lose sight of that. And these bigger liability settlements, people are getting, millions of dollars for settlements, it takes a lot of premium dollars, a lot of policies to, offset those. And so that's the kind of stuff that we see on the commercial side.
I mean, obviously that can be made, and generalized. Obviously, it's not just those commercial vehicles that are getting into those accidents and causing those insurance companies to raise those prices. I mean, it's also those, those personal vehicles as well. I mean, it goes both ways, right? I mean, like practicing safe driving, I mean, as much as possible. I mean, God knows, realistically, most people do not go the speed limit, as crazy as it is to say, right?
Does anybody, I mean, I'm not going to admit this on the camera, but I mean, I'm sure most of us have probably touched our phone while driving, or been distracted. I mean, I don't know, you were once a small baby, it's been quite a few years, but maybe the puppies, the puppies were in the back seat and they're whining. You look back, I mean, you take a little risk here and there. You change the radio, you try to get Sirius XM to tune in the right channel, whatever, right? These are little micro things that we do that can cause accidents. And the challenge with employees is if they're doing that on your clock, that's, if they're driving your commercial vehicle and they get in an accident, that's on you. Like, it's your responsibility as the boss. You could have a workers' comp claim because they got hurt in a car accident, and an auto claim because they damaged their car and or somebody else's car. So you think about this. This driving exposure, if you have that in a business, is a very large driver of your overall costs for insurance. But again, it's necessary to get them to the job site. It's necessary to move your bread around, if you will. Everything is necessary, but to try to minimize it, to try to be very precise with who your drivers are, who you're hiring too. If you're hiring drivers, make sure they know that they've got to bring a copy of their motor vehicle report in when they interview. I mean, simple things like that, and have driving standards. You can't have DUIs. You can't have more than 2 or 3 points. I mean, these are real things you can do to help control those exposures.
I was just writing a note down before you had mentioned it, being selective about, who your drivers are. I think that's obviously like a crucial part of it. I mean, we've seen an insured, contractor, right, who had, one employee who had like 3 accidents, two other ones who had 2. I mean, like that, there comes a point where it's like, hey, we might get, Tommy or, Jane to drive the vehicle instead of you, right? I mean, and that's more than okay, as long as that's something that's consistently, happening. Removing them from that driver's list, it can drive the price down a little bit. I mean, because you have to play your cards right. I mean, if you're hiring somebody to be a driver, like you say, bring your MVR report, right? Let's see if you're the right person for this job. I mean, it's like a normal background check, obviously, but you have to be, cautious with some of those things. But obviously that's legal advice. We don't get into that. But again,
I think you're totally right. And also sometimes we have to be on a timeout. I mean, the challenge is it could be existing employees, right? So that's, I know we don't talk about this conversation so far, but like having training systems, right? I mean, we talk about that zero claims mentality for workers' comp. We talk about zero claims in general. But here's something where like a safety incentive program, even having a tailgate meeting or a quick 5-minute safety discussion about safe driving, the need for your motor vehicle report to be clean for you. If you do have a ticket, let your employer know if you're a driver, but also go to traffic school, get it taken off. You know what I mean? Like make sure that you as an employee, help make yourself more employable to people, because again, this could be a difference between being able to do a higher performing job or not.
Yeah, and I mean, let's say that person who, let's say they do get a job, right, and they're driving their personal vehicle for business use. How does the employee approach that insurance? How does the employer approach that insurance when somebody's doing driving of their own personal vehicle for the business?
Well, you got that hired and non-owned auto, right? So the hired is when you rent a vehicle. Non-owned, as you know, is where you're using an employee's using their car, and it has to be kind of incidental. It can't be something you're doing every day. Number one. Number two, you do start to think about this. Like the employee has to have a certain level of liability insurance to protect everybody from third-party claims. And so how you do that, in my recommendation, is you establish like a $100,000, $300,000 limit or $250,000, $500,000, some kind of level of insurance that they need to have to basically be able to do that. Now, as an employer, you might legally have to help them out with their auto insurance to do that, but it basically gives that car liability insurance, because that hired on auto liability, it doesn't really insure the employee for driving the car per se. It insures the business on a secondary basis. The auto liability, the driver, and or the car are still primary. It's like another layer of coverage or a separate bucket of money, if you will. I don't know exactly how the structure would work, so I'm not going to guarantee it's actually a whole separate flow of money, but there is a separate pool there. And so the thing is it's not like they're fully insured. So if your employees only have, it used to be 15, 35, 30, 60, 15, whatever the numbers are, 50,000, 100,000, whatever. I mean, the point is you want to have enough coverage to where it's unlikely for your other insurance to get involved. Because again, you don't want to have claims against the business. You also don't want the employee to get in an accident. So, there's a couple different things we're trying to do at once here. But yeah, obviously.
If they're driving it, again, we want to reiterate it, if they're driving it on, more frequent basis for the business, making sure that they have, or you have a minimum limit of what that coverage should be, and maybe helping them supplement the extra costs over what they currently have is more than worthwhile to prevent claims being made towards the business, right? And obviously, if you get a ding on your commercial auto policy, right, because some other driver is driving some other vehicle and the insurance company didn't know about that or whatever it may be, that's something that can definitely be a negative impact. And so I kind of want to touch into a different side of ownership. Instead of the employee owning the vehicle, let's say that the owner personally owns the vehicle. It's in their name instead of the business's name. How can that be written on that commercial auto policy? Does it depend on the carrier?
It seems like it depends on the carrier, and depends if you're an LLC, a corporation, or just a sole proprietor. So every business entity structure is a little different. Every company looks at it differently too. So it's important to actually talk to your agent or broker about your particular situation, see how they can structure the coverages to meet your needs, and price it around, see what the other options are. A lot of agents or brokers, we have access to dozens of companies. In reality, though, for auto insurance in California, there's probably 3 or 4 that people typically use. Yeah. And again, it gives you an idea of where the arena is. one thing I was going to talk to you about before I forgot, I just want to give you that one anecdote here. We had a client that gave a couple of their employees a timeout. Basically said, hey, you can't drive the truck for a year or two. We got to get your MVR to get cleaner before we can do this, right? Because he had a recent accident. It was like $100,000. They're paying 30 for insurance. At any rate, we were able to show them like what the cost impact is to change from their current company, who probably didn't want to have those people on the policy, right? Probably would not read them either this year or next year if we would have forced them to keep them on the policy. And then showed them where Mercury, Progressive, and maybe another company or two are at. And it was like 20 grand of difference, $10 to $20,000 a year to have one or two bad drivers on the policy. And you think about that, is that person's ability to drive a car on the clock for you really, worthwhile? And a lot of times clients used to give people, cars to take home, and we had a claim, a horrific claim. A guy took a car home and ended up T-boning somebody. So he had a company vehicle. He ended up getting a loaner vehicle because that car broke down. At any rate, wasn't familiar with how to use the lights or whatever. At any rate, driving home, took a different way, whatever. Sun was setting in his eyes. He missed a stop sign. T-boned another car. Damn near killed the guy. And ended up paying about $2.5 million out on that claim. And so, the problem that we have as agents brokers is that, we tend to see the worst of the worst on these things. And these are the things that keep us up at night, right? And I can assure you when the business owner called, it was my father at the time, called my father and said, hey, Bill, do we have enough coverage or what's going on here? And we said, well, I got a $5 million umbrella. You got the other million there. You got $6 million. That made him feel a little better. But, the time to ask what your coverage is before the claim, not after the claim. So that's very imperative. We keep mentioning that to people too.
Yeah, I mean, there's a bunch of different, nuances in this. I mean, zero claims mentality in the event of a claim, what to do, right? I mean, before the claim, obviously making sure that you do have not only the proper coverages, but also the proper underwriting of the policy. While a lot of that does go on the broker, right, in terms of, making sure that the risk is eligible and answering all the questions, making sure that they do have up-to-date information is definitely your responsibility, right? If a vehicle is financed, owned, leased, making sure that that detail is on the policy as well, right? I mean, there are some little things that do add up in terms of not only your relationship with a company, right, or with your broker, right, but also in the event of a claim, your eligibility for actually getting compensated and who should be getting compensated. That all needs to be structured properly. And so again, we always incentivize our clients to do one thing. If you have a commercial auto insurance policy or a personal auto insurance policy, look at the declaration page. It should take only a couple minutes. You can ask your broker for it. Just look at the declaration page. Make sure that it looks like some things that would properly insure you in the event of a loss. Make sure that the vehicles are properly scheduled. There's no one missing. Make sure all the drivers that are driving the vehicle are on there. And if there are some drivers who, turns out, have a bad MVR, who are bad drivers, being proactive with this. We want you to be proactive with this, right? And so one other thing that I wanted to circle back on is, obviously those stories were very good. We also had a recent story where, what is drive other car coverage? Right? I mean, I didn't know what that was. I doubt anybody else out there knows.
Yeah, it's a nuanced coverage. So what we get from time to time is we get business owners that have a commercial auto policy, and it's sometimes in the name of their corporation, not in their personal name, and so it creates kind of a little bit of a wrinkle here. Theoretically, the owner's covered, but it's like more for work purposes than for personal purposes. So if you're a business owner, you don't have your own personal auto policy. If all of your vehicles are in the name of the corporation, that's fine, you're covered, no big deal, right, as long as it's properly done. But the question becomes if you borrow your neighbor's car. Now all of a sudden you're borrowing your neighbor's car to go get a loaf of bread or whatever, right? Girlfriend, you borrow your girlfriend's car, whatever, right? Then it suddenly creates this question mark. Is there coverage for that? And there is actually a special coverage you can get in most states called drive other car coverage. Then that basically is like gives the owner of the business an ability to drive other vehicles not listed on the policy for non-business use. And it's a couple $100 a year, $250, whatever. But it's something to make sure you try to have as much as possible. Again, it's always hard because sometimes people have had a personal auto policy, or they let it go, they merged the vehicle, they sold the vehicle. It's hard to keep track of all these things. And also, if you're working with multiple brokers or agencies or doing some stuff on your own and some stuff with other agents and brokers, it is hard to kind of know who's responsible for what. So it is probably in your best interest long term to either educate yourself sufficiently where you can manage it completely yourself, or to partner with a team of people who can actually help guide you, walk you through it, explain to you the pros and cons of different strategies to help contain your costs and even coverages, right? I mean, I know AI can do a lot of that stuff now, and maybe that's going to be our future. But again, you still have to get back into, what makes sense to you personally. And sometimes you need somebody with a little experience to tell you, this is what they recommend and here's why.
Yeah, I mean, like you need somebody to tell you this is what we would probably say in this circumstance is best for you, right? And so consolidating, right? I like that, consolidating your coverage, right? Whether that be with a single broker or bundling your coverage with a single company. Those are things that not only build relationships, but can definitely cut down on cost, right? Also understanding your coverages, right? I mean, like if you have a question about what is drive other car coverage, right? Or if you do have a glass deductible or a different thing on your policy that seems out of the ordinary, reach out to your broker, ask the company, figure out what that little nuance is, because if it seems like something that's applicable to you, or I mean, some people just get that gut instinct and, feel like, I should know what this is, then go figure out what that is, right? I mean, whether that be research or if it's a particular thing, just trying to understand that part of your policy is very important, right? I mean, if you have a part of your policy like drive other car coverage currently on it, right? And you don't need that, that's also something that can help mitigate cost, right?
Yeah, there's that idea too. Don't assume, right? Ask the question. There are no dumb questions. Make sure you understand. Again, if you can, get it in writing. They assume there's that bad joke, right? Don't assume, don't make an ass of you and me. There is some very good, not just humor in that, but also some real life advice, right? Don't assume you're covered. Don't assume, you'll figure it out after a claim. Don't postpone taking care of these things. Take a look at it now. Be proactive. This is our, call to action for you. Please do it for yourself and for your family and your business.
Yeah, if you have any questions like on coverages or particular things with companies, you can reach out to me. You can reach out to Brian. We do have a contact. My email is, I'll put it in the description of this video. But
we might do a podcast on it. It could be so much fun. What more could you want? But more insurance discussions.
Yeah, more insurance discussions. Obviously, this is just all about spreading knowledge and making sure that people do know what they have, because obviously it is a very small part of life until it becomes your life, until something happens, God forbid, and it becomes like the most important thing, right? And so obviously taking that proactive approach, understanding what is covered, what your coverages are, and if you do have any questions or any need for recommendations, reaching out to your broker or to people like us who understand the industry. It's our job to understand the nuances of it. That's something that could, save you, your family, a lot of time, a lot of money, and lives.
A lot of heartache. Yeah, definitely reach out before, not after. So, well, thank you so much for your time. Look forward to hearing from you next time, and be well, Aaron.
Yep, thank you so much. And hopefully the puppies are good and not biting anything.
I'm going there right now. Take care.
Bye.
Bye-bye.